Hi, this is Dan Curtis with Nomad Capitalist. Today we are talking to Jay Martin. He's an investor and the host of The Jay Martin Show. He's also the CEO of Cambridge House. Welcome, Jay.
Thanks for having me, Dan.
Appreciate you being here. Jay, as you look at your materials, your YouTube channel, and some of your online materials, you come across as a very Zen individual. Somebody who seems to make very calm and rational decisions in what is not always a rational economic world. Tell me a little bit about your philosophy to your investments and how that affects your day-to-day, financial life.
I'm glad I come across that way. It's probably three toddlers at home, Dan, is the answer to that, how I stay zen in the market. There's enough chaos when I walk in my front door. But okay, so I would call on two things that come to mind. And number one would be that I cut my teeth as an investor in the precious metals industry from 2011 through to 2015. And so anybody who's familiar with that cycle recalls that was the whole industry falling off a cliff for 4 years straight. And at the time, I didn't know how opportune that was for me to walk in the door as everybody was running out of it. But it was the absolute best thing for me and the best way for me to start my career as an investor and in this industry, because you walk in and from day one, you acknowledge that it's actually really hard to make a buck, and it should be, right? I've experienced bull markets too. And when you're in a bull market, we all confuse our intelligence, right, for our winning, right? And it can be very easy to to generate a return and opportunities everywhere and a lot of dumb money floating around, and you make decisions that don't make sense and you're rewarded for them sometimes. And all this stuff, it's bad for you. It's bad for your psychology as an investor long term, and people get trapped. And we're watching that right now in the crypto sector, right? We can get into that, but step one, I think, is my first 4 or 5 years were just surrounded by pain, and it was fortuitous that as a consequence, the people who stayed in the sector that I built my network with, they were very productive because all the noise and the flash, it vacated, right? When an industry crashes, it's the most productive time to be in that industry. And that was really fortunate. So I got to climb the ladder exceptionally fast in terms of building my network with battle-tested veterans who had control over their emotional state when the price goes up and the price goes down. And so I think there was some osmosis from that. But the lesson I took, I suppose, was rule number one is stay alive, because I saw all kinds of people get cleaned out, and we're seeing it now. We're going to see it, every few years in some industry. And so if rule number one is stay alive, how do you facilitate that? And what was mentored to me at that point, and it's evolved since then, was have an untouchable off-grid hard asset, right? And what that purchases you is peace of mind. That purchases you a good night's sleep. That gives you the ability to make those super high risk bets where I like to play. I love the early stage game. That's where I invest, right? But it's very unpredictable. It's incredibly volatile. That's guaranteed, right? And so how do you stay calm, when, you're seeing 70% drawdowns, or just you're in a position way longer than you planned on, or something material changes and you feel a bit trapped? Well, it's knowing that whatever happens out there on that high risk end of the barbell, the other side is a rock solid foundation, right? And I know that anything can happen, right, on the volatile side of my portfolio. And I've still got a roof, I've still got a bed, I've still got, whatever the overhead I need to sleep well at night in that safe, right, hidden away. That just, and then you're not responding, right? You're not reacting. I mean, the best thing you can do as an investor, you get pitched new ideas all the time. There's FOMO, there's greed, and all this stuff. Too frequently, we react. The smarter thing to do is to pause, think, and act, right? But it's exciting, and reacting is way more fun. If we can police ourselves to pause, think, and act, right? I always end up making better long-term decisions. But how do you get to that place of patience? You need the option to do nothing. And the only way you have the option to do nothing is to know if you do nothing, you're just fine, because the war chest has been taken care of first and foremost. So these amazing, highly promising opportunities come to my desk, and I can take the opportunity or not. But either way, it doesn't matter for me, because I know tomorrow is going to be the same no matter what, because the war chest, that solid end of the barbell, is taken care of. Does that make sense?
It does, I mean, it brings to mind the saying that, success is really just being there and and being there long enough to ride out the highs and the lows. It is a polar opposite to some of the investors I talk to on the day trading side. But
Yeah.
I do see your point. Uh, you talk about early stage investing, and I know you're heavily involved in the commodities markets. How do you, I mean, it used to be commodities were relatively safe, and I'm not feeling that way anymore. Gold is going up and down, silver is going up and down. I hear uranium's a fairly solid bet right now, but how do you determine which early stage, kind of bedrock investments that you're going to make? How do you find those?
So a couple things. Like, first of all, I do stick to what I know. Yes, I'm bullish on uranium, but I don't understand the supply and demand economics, honestly, nearly well enough to go in aggressively. And I've got some positions in some development companies that I feel good about. But the majority of the uranium sector doesn't understand uranium. That's what I would argue. The supply and demand economics of uranium are far more complex. A lot of the contracts are hidden. You don't know what's going on. There's actually a lot of uranium. It's in the ground. We don't have it out, but there's not a shortage, right? Especially in terms of the amount of reactors that are currently in production, right? And to build those reactors takes decades, right? It's a big game, right? And so, stick to what I know. If I don't feel like if I don't have a competitive advantage in uranium, then why would I go there, right? Other people have a competitive advantage. So maybe if it's something obvious, for sure, have a horse in the race. But
Yeah.
I try to identify that. Sorry, go ahead.
No, I was going to say, yeah, I get it. Scarcity doesn't always equal success either. I mean, there's a limited number of Bitcoin in the world as well,
Sure.
and we've
Yeah.
seen what's happened to that over the last couple of weeks. So, yeah, I
Yeah.
realize there's factors in there that I mean, you just have to know the
And
market.
things change, right? Like, you look at the renewable sector, battery technology, it might make you bullish on lithium. Turns out that was smart a few years ago, but there's actually a lot of lithium, right? Cobalt, another great example, was supposed to be in hot demand in order to build batteries, until we learned that it's actually not enough of it. Where it's located is in super hostile countries. That's tough to get it out of. So, renewable tech is an emerging technology. Those things can be engineered out, and they were, right? Cobalt's no longer in demand like it used to be. And so, you know, I like the what I would call like the foundation commodities, right? For me, and I'm talking about hard commodities. I don't invest in soft commodities like coffee and orange juice, right? But I like gold, I like silver, I like copper, I like nickel, right? Those things are very, very hard to replace. You can replace cobalt, as we did. Maybe you can replace lithium. We'll see, right? I don't know. The test of time, gold, 5,000 years, doesn't mean it's going to be valued in 100 years, but it's a pretty good chance that it will be. 5,000 years is a pretty amazing track record, right? And I like copper and nickel because you can't replace those within conductivity. And so if you're betting on the innovation and growth, renewable sector, any economic growth, you need those commodities. So yeah, you get the tailwind, and then I look at the super early stage opportunities, entrepreneur first, right? It's always about the who am I investing in.
Understand. And you touched upon there are some hostile countries in terms of in investment terms. Do you take the flip side of that? Do you see countries out there that are more friendly to commodities investors or investment in general?
Yeah, it's kind of a loaded question, isn't it? Because what might have been a friendly country 10 years ago, you'd really have to put a question mark on it today. I would say I stay within predictable jurisdictions, right? Maybe like Canada, the US. There's not, I don't know, there's a better gold jurisdiction than, in the United States. And obviously, my audience, maybe yours, would punch back on that and say, what on earth is predictable about the Canadian government, or, all this stuff. But it's like, you got to think in relativity, right? So relative to where else you could be, right? Yes, there's corruption in every government. If you don't think so, you're fooling yourself. So of course, there's corruption in Western developed nations as well, but relative to where else you could look. And so, I think that, you got to factor that in and just understand. I think we're moving from you know, uh, a period of intense trust and cooperation globally, and that trust has now been shattered, and the chessboard's being reconfigured, and we don't know how the pieces are going to fall. But the era of cheap energy from Russia, cheap labor from China, and cheap capital from the US, that game is over, and the pieces will realign on the board, and we don't know how they're going to land, right? We don't know where the alliances will be, and so I think geopolitical risk is more significant and harder and more complex than it's ever been in my 14, 15-year career.
I would agree. And, obviously, you run a remote business for all intents and purposes. Is there a reason you choose to base where you base?
Yeah, I base where I base because I'm a mountain biker, rock climber, skier, and I have 3 kids who are going to do the same thing. And so I'm in a little mountain town on the west coast of British Columbia. And it's lovely, 18,000 people. It's perfect for us. High community environment. It's fantastic. Um, and so it ticks a lot of the boxes. However, over the last 2 years, my wife and I, my wife who is American, we've been looking closely at like what's our line. Like, there's been a lot of movement in terms of risk management within countries recently, and you got to wonder like, when is my line crossed, right? And so we've been looking at our options in the U.S. due to her passport. We've looked abroad as well. Actually, Costa Rica is one country that's come up on our radar many times. We're not ready to take that step. I don't feel like it's necessary because I would have to replace all of the community and village components that are so valuable to raising a young family, including proximity to extended family. And I can't do that. And so, we're perfectly situated for what we want. There's absolutely costs involved with that we would prefer not to have, but we just be replacing those costs with other costs should we move somewhere where, our tax burden is less, or we felt there was a greater sense of liberty. Everything is an exchange, right? And so this is good for us right now. My business is virtual. My wife's business is virtual. So we have the option. Should we exercise it? We're ready to. We haven't yet.
I have no doubt you'll get comments from Tbilisi, Georgia, on why you should call that home. But
Bring it on. Yeah.
we'll see how that goes. As part of your business, Jay, you like me, you're around a lot of smart financial thinkers. Who has influenced you, and how has being around that group of smart financial thinkers influenced the way you approach finances?
Well, the number one way that it's influenced me is clear. It's that if I interview 100 different money managers, I'm going to hear 100 different perspectives and 100 different predictions. And the one lesson that you can take from that is that nobody has a clue what's about to happen next. And that's not a jab at anyone. It's just very hard to determine. And so, I think accepting that humility is like rule number one as an investor. And everybody gets burned and everybody gets wins. But it's hard to predict what will happen when. And so, never fall in love with an asset class. That will be one that I've seen occur, and a lesson that I had to learn the hard way a couple of times, and that we're watching a lot of people learn the hard way right now in the crypto space. And I saw this happen to evangelical dogmatic gold bugs through 2011, 2014. When the laser eyes and the have fun staying poor memes started coming out, it was like, I've seen this movie before. This is just the dogmatic gold bug in her new costume. And, when the market crashes, they get hurt harder than others because they fell in love with their asset and they're learning the hard way that the asset doesn't love them back. And so, being able to step back emotionally from all of your decisions would be the first and most important thing that I've learned from my crowd. And there's not necessarily one or, a few individuals that strike me as the most influential, although there's people that I pay a lot more attention to. And Lynn Alden is one. I like her technical approach. I think it's important to pick a few from camps that disagree, right? Like I listened to Jeff Snyder and David Rosenberg, and then I listened to the inflationists as well, right? And it's like, well, I don't think either of you actually know, you don't, right? But you're putting together great research and analysis and making your best bets. And if you have skin in the game, then you have my attention, right? Because then I know at least you're invested in your predictions. But there's not one. I mean, I mentioned Lynn, but honestly, Dan, there isn't one. I listen to everybody, acknowledge nobody knows, find the path which suits your risk tolerance, available capital, and time horizon, and then take some action steps down that path.
So keep CNN on one screen, Fox on the other, and kind of go down the middle.
Yeah, I guess so. Yeah.
You touched a little bit on crypto, Bitcoin, digital currency. I realize this is not your expertise, but so much has happened in that market over the last couple of weeks. Do you have a take on it? What was this a natural shakeout in your opinion? Was this? I've heard it was a kind of purge of some bad actors. What's your feeling on that?
Yeah, I mean, we're recording this on November 30th, and everyone's looking at the FTX Almeida scandal, which If I were to hazard a guess, I think that scandal actually occurred in June when the market crashed and they were exposed. And this is when a lot of the nefarious behavior began or accelerated. And it just came to light recently. But this crash with FTX and Alameda occurred back in the spring. That's what it's starting to look like. And I think we're going to continue to learn more as investigators get deeper into it. But it's been a fascinating story to watch. I mean, honestly, I'm more bullish on the crypto sector than maybe I've ever been. And I would say that with the cautionary note that you may be 3-4 years of pain into this, right? But like I said at the beginning of this interview, I was so lucky to walk into the precious metals sector as the house was burning down. And the house stayed burned down for 3 or 4 more years. It was the best thing that could have happened to me, right? Because when the market started to take off, I was positioned very well within my network and my understanding of the industry. And so I'm probably going to start paying a lot more attention to the whole Web3 world over the next couple of years than I ever have, because it's turning on itself right now. I mean, I'm a sector agnostic YouTube channel, but I know Bitcoin YouTubers whose audiences are turning on them. They're like, this is dead. The game's over. And it's like, that's a highly bullish signal that may take a few years to play out. Also, when you look at the crypto cycles, it's operated almost like a finely tuned clock. I mean, on the 4-year spin. And so it's curious to me that people are so outraged and surprised when the market corrects like this with such regular cyclicality. It's like, how did you not think that might happen again?
Yeah, and I mean, if you're a new investor, the thought of coming in at Bitcoin at 16.5 is a lot more attractive than coming in at 60, I would imagine. But yeah, I agree with you. It's cyclic. Keeping on that topic, do you feel in any way that the events of the last really couple months have led to a greater possibility of governments stepping in and regulating themselves in terms of crypto? And do you
Probably.
see a digital currency coming that's regulated by governments?
Oh yeah, absolutely. Most governments have been fairly transparent about that. Payments Canada's website, openly states they're working on a central bank issued digital currency as a just in case. They have no plans to roll it out, but they want to be ready if and when that time comes. And it's, I think, a very logical step in the evolution of money technology. So it's for sure coming. And then when people get hurt, governments tend to step in with top-down management, right? Which never works, but it happens again and again and again. And we're going to see that, I think, in crypto. A bunch of people got hurt. And so the government will step in and say, we're going to clean up this mess for you with some top-down regulation, which is highly unproductive and slows innovation and all the things we know. It makes it a less productive industry. But I mean, we just have to assume, I have to assume based on past record, that's exactly what's going to happen here. And even, pundits like Kevin O'Leary, the next day, FTX crashed, and he's like, I'm flying to Washington to demand regulation. It's like, because that's what your audience needs to hear from you. I get it. Yeah. You're going to go save the day, right? But it's a high risk game. Just acknowledge that.
Well, yeah, and he was heavily invested. What do you see? You hear the term safe havens thrown around a lot. Do you see any global safe havens? Are you looking geographically at all?
In terms of my location?
Nah, just in terms of your investments.
Yeah, once again, I mean, I do think Canada is relatively predictable. I think the United States is relatively predictable, right? Relative to other nations. I mean, you look at the second largest economy in the world, I would say that's far less predictable than the first largest economy in the world. And so, relative to global options, I do like Western developed nations as a store of my wealth. But, truthfully, like I don't touch many of the products that might expose me to that. I don't touch treasuries and bonds. I don't touch, broad sector equities, Dan. I'm very barbelled. I'm primitive on the one end with rocks and land, right? And then the other is highly speculative. What's that?
They're not making any more of either of them.
No. And I just, it's what I need for my psychology to feel good and know that my kids are okay and all of that stuff. And I know it's kind of cowboy and backwater, but like it works for me, right? I live at the entrance to the mountain, so we can disappear if we need to. But it's important. And so yeah, it's super basic. Like it is hard assets and dirt, really. And then over here, I go to highly speculative startups and early stage companies where I'm more exposed to the vulnerabilities of the entrepreneur than any kind of geopolitical risk most of the time. So that's how I think about it.
Understand. Um, Obviously, everybody has their own mind. Everybody needs to make up their own mind about their investment strategies by themselves. But do you have any predictions for 2023, just in terms of commodities, in terms of early adoption, technologies, in terms of crypto? Is there anything you're looking at and saying, not a whole lot of people are seeing this, but I do?
Well, my only prediction would be that the 2020s would, I expect them to be how the 2020s have been thus far, meaning increased, unpredictable chaos and volatility. I think maybe the party's just getting started, right? That's possible to me, right? We had,
Right.
a big global pandemic. We have now a hot war that we don't know how this is going to shake out over the next few years. I think there's a lot more chaos to come over the next few years. So I don't know. I think there's too much complexity and uncertainty as we move into the, whatever you want to call it, right? Fourth turning. But like, what am I doing? I am, like I said, I'm looking for conservative yield. And so for me, that looks like real estate in locations where I can go and check in on it. Heavily exposed to gold, and I take possession, right? I like to have it in my possession. So I'm not buying, options or ETFs or anything like this, right? It's the hard asset that I love. I'm buying crypto quite aggressively right now, I would say. And when I say aggressively, that's relative to I dollar cost average in. I don't look at the price. I'm not buying dips. I don't try to time the market. Don't feel like I can. Don't think I should. Feel like most people probably should not try. But an immaterial amount of cash every week comes out of my accounts into 4 positions in the crypto sector, which I just feel like I want exposure to. And, the immaterial number means that it doesn't disrupt my life at all. And so I can part with it. And if that goes to zero, it's not going to affect tomorrow for me, because although I do think Bitcoin might become some kind of a store of wealth one day, it's not there yet, obviously. But it is the only stock the entire world can buy, right? Well, that and a couple other cryptos. So it's appealing to me for that reason, right? The game theory might be very valuable there. And any business case where you've been able to invest in the network effect, right? That's created the biggest social media companies of our lifetime, right? That network effect and the robustness that comes with that. Well, it's in the same philosophy, right? So it's appealing to me for that reason. But no, I'm playing a very long game. My exposure to early stage stuff is pretty boring. It's gold, copper, nickel, silver. Like I said, I have a little bit of exposure to uranium, but less than the others because I know it less well. And then I, just because my passion on the recreational side is within the health science, food industry, I do have some positions in some, a handful of food production companies right now, actually. And I'm looking for exposure to interesting, innovative agriculture businesses. I thought I had zeroed in on one. When I took a deeper look, it was not the opportunity I thought it was, but I'm very interested in food production right now.
Well, yeah, I mean, it just sounds like the epitome of the institutional investor, and there's nothing wrong with that strategy. Last question, and this is kind of a companion question. Tell me something you're optimistic about.
Humans, I will bet all day long on human ingenuity. It's so easy right now to think that we're just headed for perpetual darkness, right? And, I'm guilty of this on my channel. We get, a lot of traction when I put out a piece that's kind of doom and gloom centric, right? If my guest is calling for the end of everything,
Yeah, well, for sure.
yeah, deeper global depression than we've ever seen before, all of this stuff. Step back again. Don't get emotionally invested in that trade because that's all it is. What's the long-term trajectory of our species? Well, it's super bullish, right? And so I'll bet all day long on human ingenuity. I think out of the fire, we build bigger and better than ever before, more sustainably, smarter, more intelligently. And yeah, I think we're probably in for some increased volatility. Be ready for that, right? Build the moat. Don't build the castle right now, right? Build the moat. Be ready for that warfare. But long term, I'm optimistic for the future that my kids will grow up in. I am.
Good to hear. Hey, Jay, where do we find you?
I am, the Jay Martin Show. Check me out on YouTube and Spotify, iTunes, wherever you download your content. And then I publish a weekly newsletter that I absolutely love writing. It's every Sunday. It's actually free, and it's probably my favorite thing that I do. You can subscribe at jmartinshow.com, maybe the jmartinshow.com. I'll get you the link. And then J Martin BC at J Martin BC on any social channels.
Jay, it's been an enlightening and delightful talk. I really appreciate the time.
Pleasure's all mine, Dan. Thank you.
We'll do it again. Thanks very
All
much.
right.